I like to promote solutions to problems. But at the present moment, the problem I'm going to talk to you about has no solution as to the cause. I think we have options in terms of how we prepare for the inevitable and how we prepare to get through it. And then later on, we'll worry about how we're going to come out the other side. But we're looking at something that is worse than 2008. Oh, I wish I wasn't making this up. If anything, I'm going to be underselling the threat. A lot of people are saying can happen tomorrow. I have no idea. I'll tell you this. I don't think we're getting into the spring and summer. I would be surprised. And what am I talking about? Well, we're going to tell you all about the $223 trillion debt that on the surface is off the books. But it's something that's already threatening the existence of BlackRock that I reported on last week with Renovo and their backing and how Renovo went down. And we're going to get into a lot more of these stories in this particular segment. But I will be giving you what I think you can do for personal planning. I just hope we have the time to execute the plans because it's always capitalism for the big boys on the way in and it's socialism bail-ins on the way out. And this, we're going to see both a bailout and a bail-in, and we're going to hit it right here on the Common Sense Show. I'm Dave Hodges. I'm the host of this show, and we are freeing America one enslaved mind at a time. Thank you so much for joining us. Really, really good to be with you. And I have to tell you, this is something that I wish I didn't have to report. But I'm going to give you a solution up front. It's not the only solution, but I think it might be the primary solution for a lot of people. Number one, you need to get out of your bank as much as you possibly can. You need to get into instruments that will preserve wealth, not erode wealth. The banks erode wealth through inflation. Exactly. $100,000 in the bank in 5 years going to be worth about $60,000. Yeah. You need to get into gold. And Noble Gold can help you with this. And right now is the time. And if you have a retirement associated with the bank, you'll soon be kissing it goodbye. The pensions are in big, big trouble. You need to get these in your name, gold back. Noble Gold does that. Need to do it. You need to do it now. Call 877-646-5347, 877-646-5347. Tell them that Dave Hodges of the Common Sense Show sent you. $223 trillion derivative exposure. We have our surface banking system. It's highly regulated. Not that they never do anything wrong, HSBC, Wells Fargo, but not that they ever not do anything wrong, but they're fairly well regulated. And then we have the shadow financial system where private equity is locked up in. Oh, you've heard this before, right? 30% of all homes built today are built for rentals. Uh, we're overpaying for house prices, or we were, or the market is, and it's being done by private equity, Blackstone, BlackRock, and they're buying up homes to turn them into rentals. The process of eliminating home ownership privately for the average person is ending, and it's intentional. And it now takes what, $120,000 to buy of income per year to buy a starter home, where it was about half that 6 years ago. Yeah, this is not an accident. Private equity. And what they've done with these loans is they have bundled these loans together. Oh, but it's not just housing. The car market is the same thing. And so 78% of Americans have to drive to work. So they need a car. And the average payment now is over $700, approaching $750. And they're making these subprime loans, which we're seeing in the housing market again. And this is what crashed the system in 2008. We're seeing it in the car market now, making loans to people they have no business making loans to. Now, this is on the individual level. If we go back to the housing for a minute, the bad loans aren't being as, and they're being made, but not as much to the average person, but to corporate investors in the what we call the shadow banking system of private equity that lives in the shadows. It's largely unregulated. They make up their own credit ratings. I mean, they lie their butts off and say, we're AAA. And they get, it's not Moody's doing this. They go and get these startups, I think, that they create to give them a AAA rating so people are sucked into buying. And this is how you see Renovo that BlackRock was holding. Uh, you can see how they go from what? $50 million of claimed revenue to zero in 2 days. How does that happen? Well, it's because the books were cooked. The books were cooked, and we're going to find a lot more of this. So we're seeing it both in housing and cars. We're seeing it in commercial real estate development as well. That market's already been unfolding for a couple of years. This is an unbelievable crisis. Let me give you the amount that economists are saying, $223 trillion. And we're worried about a $38 trillion debt that's already wrecking the economy. $223 trillion. And now I've saved the worst for this. You got a bigger problem than housing collapse, auto collapse. What do you think that problem is? I'll pause this. You can go into your comment section if you have one, or just send me an email and tell me what you think it is. Okay. Have you guessed what it is? It's all the loans, regardless of the industry now, that they're going into the private equity management because of the lack of regulation and oversight, which can allow 2008 to happen again, where if the banks were doing it in the public eye, it'd be really visible to everybody, and the SEC would feel the pressure to respond. Now we're talking about a quarter of a quadrillion dollar debt tied up into this. Here's what they do with these loans, regardless of how they're made. Corporation to bank, bank to corporation, corporation to corporation, bank to bank. It's all tied up in this. Now, they bundle the loans and then they rebundle them, they sell them, and they rebundle those loans and sell them. You may have heard that one of the ways that mortgage fraud happens and people lose their homes is the fraud that intersects itself with the 30 transfers of home ownership. Remember that? That came out, what, about 4 years ago? And we were talking about that still going on today. Having your home title stolen is one of the biggest identity theft risks that we have right now. And I'm glad to see that companies like LifeLock are trying to address this with the early warning system. I don't know if anyone has a foolproof system, but this is the example of bundling, rebundling, bundling, rebundling, and selling. And so what you have is a house of cards with fake credit ratings, with companies that don't have the necessary reserves because it's not regulated. And so they can claim, oh, we're AAA, and you assume, well, they must have the reserves like the banks would have to. Uh-uh. They ain't got jack squat. And when one domino falls, they're all going to fall. The pattern of collapse will be the same as 2008. The housing subprime market, the credit swap derivatives, that started the first domino, boom, 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 boom. And then pretty soon you're taking out companies. Now, how did the government respond at this time? Well, they bailed them out. But we weren't looking at $223 trillion. Now, and the government even let some of the big boys go defunct, right? Shearson Lehman, probably the best example. Well, I imagine they're going to let some of these companies go defunct again too when the government takes over this crisis. But here's the problem. It's estimated this is at least 3 times larger than 2008. A bailout, there's not going to be a dollar left if you start printing the money for a bailout. The system will collapse in mid-printing. So what you're going to have to do is take money from your citizens. And I believe it's going to come in one and possibly two forms. And I don't think I know. We're looking at a bail in. Oh, you have your 100,000 in the bank. Sorry, we've had to revalue. And what we're looking at right now is your 100,000 just became 40,000 like that. That's the Cyprus figure. They went through that a few years ago. And I'm not sure that's enough because the $223 trillion debt is bigger by a factor of over 200% over the entire GDP of the planet. I didn't say the United States. I said the planet. And you're like, holy crap, Batman. Yeah. How are you going to make that up? Well, bail-ins might be a partial answer. Total confiscation, you're going to have the pitchforks in the streets, and I think that they want to try to avoid that. A bail-in is, well, we've taken a lot, but at least you have something, so shut up. But there's more. People like me own my home outright. Have no mortgage debt. Haven't had for years. But I have equity tied up in my house. I don't touch it. I think it's a rat's trap. But Scott Bessent has already said that equity in homes can be used to help finance the debt. Everybody thought he was talking about the $38 trillion debt. And I was saying, that's a bad plan, Scott. Well, he's talking about the $223 trillion private equity debt that's coming. And it could come in a weekend. You go to bed on Friday night and think everything's fine. You wake up 2 days later, all hell's broken loose. But they have the replacement system. I talked to you about Fed Now, how it's really the first phase of CBDC. They've got the Real ID that's coming out the first of the year. It's kind of giving you time frame estimates here. And Real IDs, digital ID can be tied into what they're doing with CBDC. Phase one, moving into phase two is the integration of this, consolidation. And now you're into all the things that we feared with CBDC. Social credit, controlling how you spend your money, eliminating your ability to save beyond 30 days, directing income in a certain area, prohibiting buying certain things. It's not hard to see the roadmap here because of all the infrastructure on the periphery that's being set into motion. $223 trillion, and we're worried about 38 trillion. By the way, tack the 38 trillion onto the $223 trillion. My math is correct. That's about $260 trillion. GDP of the planet, just over 100 trillion. There's no getting out of this. And it's these fill in your cuss word adjective for these people, that these people on Wall Street, they will walk away with their money. They have put it into crypto in gold because they know they want to be outside the digital system as much as possible. They know what's coming. And they're making money based on fraud, fake credit reports, bundling on top of bundling, layer after layer, hard to dissect. Even if the feds want to investigate, it could take months or years. We don't have months or years. And I'm telling you what, when Scott Bessent's talking about taking your home equity to finance the debt, you're not going to get any help from the government. The government's the problem. The old Ronald Reagan statement. Hi, I'm from the government. I'm here to help. Scariest words in the English language, but those words are coming. And this time is coming. This is not hype. This is not hyperbole. And let's go back to where I started. Bleed down your bank account to operable amounts. Get into gold and silver and crypto. The gold, Noble Gold is who I'm going to use. Been a customer for over 8 years. I've been an advertiser for over nine. And so I can give you this warning. It's funny. The FTC wants me to tell you there's a risk involved in investment. Where's our warning for what I'm telling you? Well, it's kind of like the Charlie Kirk investigation. The government ain't going to tell you the truth or tell you squat. It's up to people like us to bring the truth out. And that's what we've done here. Noble Gold again can be reached by calling 877-646-5347, 877-646-5347. And if you forget the number, just go to davehodgesgold.com to get the process started. We'll see you back here next time.